I've seen a couple people online say that mortgage rates should fall because the Fed dropped its rate almost to zero. Let's talk about that. Hi everybody, I'm John Wake. I'm a real estate numbers geek, and today I'm in the McDowell Mountains in Scottsdale, Arizona. Okay, because of the coronavirus, on March 15th, the Fed dropped the federal funds rate to almost zero. Yesterday, it was 0.09%. My first thought was, hey, we had the federal funds rate that was this low for years during the Great Recession. Won't rates just go back to where they were back then? The federal funds rate was super low from 2009 to 2015. Sometimes the federal funds rate was even lower than it was yesterday. So where were mortgage rates back then? From 2012 to 2017, the 30-year mortgage rate was from 3.5 to 4.5%. So just looking at the federal funds rate, it would seem that 30-year rate would go back to where it was, which was in the range of 3.5 to 4.5%. Right now, the 30-year fixed rate is running at the low end of that range, about 3.5%. So why do people think that mortgage rates will fall even more? They're keen not on the federal funds rate, but the 10-year treasury rate, which is a lot more closely tied to the 30-year fixed mortgage rate. The 10-year treasury rate is running about a half point lower than it was just in February. So those people are thinking, hey, this means the 30-year mortgage rate might follow suit and fall about a half a percentage point. I don't know why the 10-year treasury rate is lower than any time during the Great Recession. I think it's likely due to all the extraordinary measures the Fed has taken in the last couple, 3 weeks. I don't know if this decline is just a short-term anomaly. I don't know if the 10-year rate will bounce right back up soon. The big question now is whether the 30-year fixed rate mortgage rate will go down as well. Will the mortgage rate fall too? If it falls to 3% or lower, that would support house prices right now. A half point decrease in the mortgage rate lowers the monthly principal and interest payment by 6%. It's like houses are cheaper for people taking out mortgages when the mortgage rate falls. It's harder for house prices to fall when mortgage rates are lower. But on the other hand, lower mortgage rates will probably be converted into higher house prices and less affordable houses in the long run. Could take 2-3 years. Great. Please leave your comments below and subscribe. I appreciate it. Take care.